In this video, I would like to share with you Coinbase's new Layer 2 public chain called Base, which was released in February 23. This public chain is also based on Optimistic Stack technology underlying Optimistic, OP. Its goal is to become a bridge that connects Ethereum, Solana, Bitcoin, various Layer 2s, and more, so that more people can enjoy the fun and experience that cryptocurrency brings to them. The entire base will also be optimized for high TPS and low gas fees through some technology and performance improvements, so that more and wider applications can run on blockchain in the future. As an important step in Coinbase's plans, Base has many details worth exploring, including why it chose to build on top of Optimistic, as well as its current development status. On the evening of February 24, Coinbase's Base and OP also released commemorative NFTs, although their use is currently unclear. You can still do a free mint, which only requires a gas fee, and the NFTs have already been minted nearly 50,000 and 30,000 times respectively. Eventually, the Coinbase chain base does not issue any tokens because Coinbase is a publicly traded US company and the SEC currently prohibits token issuance. Therefore, we should not expect any future airdrops, but Base can do more collaboration and interpretation with OP. Okay, now we're moving on to the main part of the video. Earlier on February 24, Base Layer 2 blockchain also released a comprehensive introduction. In the introduction article, the Base official team deeply explained why they created Base, their role within Coinbase, why they chose OP as their technical station to build this blockchain, and what they plan to do with this blockchain in the future. Actually, in the previous parts, they kept talking about what Base chain is doing and why they are launching Base. Coinbase's main goal is to build a new, open, and free financial system, which is very similar to the concept and idea of Bitcoin. I remember when Coinbase was launched, their CEO tweeted thanking Satoshi Nakamoto, whoever he or she is. So in this sense, what Coinbase wants to do is very similar to what Bitcoin wants to achieve. However, for Coinbase itself, although they are already a publicly listed company in the US and the only publicly listed cryptocurrency exchange company in the world, most of their business is still off-chain. For example, their core exchange business has nothing to do with blockchain, but they may invest in many applications or teams that may have a desire to come on-chain, including Binance's Base initiative. As a cryptocurrency exchange, Coinbase has a lot of industry resources, the best traffic, and the most support for projects. Launching a public blockchain is a natural advantage for an exchange, and many exchanges have already done so, such as OKX's OKX, Huobi's Heko, Bybit's Mantle, and Binance's Base. This is a must-do for exchanges, especially with the DeFi and GameFi booms, which have brought a lot of traffic and money to Base and caused BNB's price to rise. As a publicly listed company, Coinbase cannot issue its own currency, but it can support its own blockchain in a similar way. If the ecosystem of the blockchain develops well, it will definitely have a positive impact on the company's stock price. The stock symbol for Coinbase is Coin, and the new Layer 2 system is called Base, which fits perfectly with the Coinbase name. Next, let's take a look at what the entire Base chain wants to do. They went through a lot of choices and decisions, including choosing to use Layer 2. Why? First of all, the most popular platform among developers is still EVM, and it is necessary to develop on Ethereum. In addition, Ethereum currently has the most valuable dApps, in terms of developer numbers, locked funds, TVL, and actual valuable and applicable applications. Therefore, they chose Ethereum as their development target. Secondly, Ethereum's Layer 2 still needs to be expanded. Currently, these Layer 2 are still relatively expensive. For example, if you trade on Polygon or OP when gas fees are very high, it is still relatively expensive. I mean, before optimization, it may reach nearly 10 cents, which is still quite expensive, ranging from 5 cents to 25 cents. For ordinary users, if you have to spend 25 cents on a transaction, it is still impossible to achieve large-scale expansion and application. So next, they also talked to many teams and discussed with various layer 2s, and finally chose OpStack. Why choose OpStack? It is not very clear here, but in short, they said they chose OpStack because it can provide better technical services and support. In fact, for the entire Op ecosystem, it is not the strongest in the competition in the Layer 2 space. In terms of data, Op's TVL ranking is still far behind Layer 2 solutions like Polygon and Arbitrum, as well as Ethereum sidechains. Moreover, if we look at the Op ecosystem from a data perspective, there are not many projects that stand out except for the Synthetics system. Although their first project Velodrome and the lending protocol have gained popularity and seen significant growth recently, they have not provided many innovations. Although the exchange is currently ranked first on the entire Op chain, we know that many things on the Op chain are done by the Synthetics system. Op has been persistently adhering to the original Ethereum community, including Synthetics' decision to wait for Op for more than 8 months instead of deploying on Arbitrum or Polygon, because they are loyal followers of Ethereum, including Uniswap. Uniswap and Synthetics are closely tied to Op, and their founders Kane and Hayden have both tweeted in support of Op, as well as Ethereum founder Vitalik Buterin. Therefore, Op represents the orthodox Ethereum community, which is different from Arbitrum in terms of some technical aspects, such as the need to wait 7 days to withdraw from Op's fraud verification, while Arbitrum does not require this. So, I think the orthodox nature, combined with the protocols and applications on Op, are mostly dominated by Ethereum leaders, and represent the persistence of the earliest Ethereum believers. Therefore, Coinbase's combination of technology and these factors chose Op, which I think is currently the biggest factor. And if Coinbase collaborates with chains like Arbitrum, whose ecosystems are already very rich and diverse, it seems that Coinbase cannot demonstrate any significant strength. In the future, I personally still have high hopes for the development of Base. Firstly, I think that with Coinbase's influence, they should be able to recruit more developers and discover more teams to develop on Base. So, I think that Coinbase's entry will definitely break the current patterns of Layer 2 competition. So, we can see that the new bull market represented by the entire Layer 2 seems to have started from this point. Whether it's a base that hasn't launched yet or a public chain that hasn't built its underlying architecture, or like Op, which has been particularly strong recently. After the news released by Coinbase today, we can see that the price of Op has also exceeded $3, which is one of the largest increases recently. Although it has not broken the historical high, the rise has been very sharp. So we can see that people are paying more and more attention to Layer 2. We also hope that Base can attract more people or find more traffic passwords to create better applications. So personally, I think that the new Layer 2 launched by Coinbase will definitely have a lot of potential in the future, including applications that can be played on it. Whether it is for Coinbase stock investors or ecosystem builders on Base, it is a very good booster and allows everyone to have a better expectation or more thinking space. Moreover, the technology of Layer 2 is already quite mature at this stage, so there should not be any major security issues. Thank you for watching, we'll see you next time. Bye.